Yo, what's up everybody? It is, Tuesday, November 9th already. Coming up, and market pullback today. Gotta expect that every once in a while, folks. Can't go up every single day. Get a little bit overly bullish. People jumping in after, a multi-day rally. Gotta expect a pullback. That is normal. It's absolutely normal. The thing to remember and the thing to stay focused on, those are the real underlying factors, the fundamentals. Those are the fiscal flows, the things that I talk to you about every single day when I make these videos. That is still very positive. As a matter of fact, surprisingly positive, as I've been mentioning. Yesterday, for those of you who received my report or listened to the commentary in my video, 29 billion a day average daily flow, that is exceptionally strong. Like, I did not expect to see that. We ended up around 520 billion for the month of October. Now November is on track to surpass that by a significant margin. Now it could come down a little bit, and as I said, we may start to hit some problems around the end of the month, because that's when we're coming towards the winding down of this continuing resolution. That's what's funding the federal government right now. And again, we're going to have the stupid debt ceiling to deal with. But I think all these things are going to be resolved. They always tend to get resolved after, everybody goes through their bitching and moaning and complaining and brinksmanship. Eventually they get resolved. So I'm optimistic in that sense. Going forward, again, I'm just going to have to say, I do not see any real negatives. The only potential, assuming we get past the December 3rd, refunding, or I should say debt ceiling, and then a budget, hopefully. But we're really talking about the midterm elections next November. I mean, the level of flows here, we've already seen most of the reduction that we're going to see, and that occurred in September with the cuts in the unemployment benefits. Okay, unemployment benefits are average daily flows now are down to something like 196 million. That is nothing. I mean, in terms of government spending, 196 million a day is like, you couldn't even find that, laying around somewhere. That's like zero. And a month and a half ago or 2 months ago, you were looking at 1.4, 1.5 billion per day. So that was the major reduction in the flows. Now we're at a level that is basically stable. But there's even more bullish news on top of that, which is the fact that Social Security benefits are going to go up by a significant amount next year in January, because of the cost of living adjustment. I mean, a lot of people saying they're complaining about inflation, and inflation is not fun. Although I say, look, ask any farmer, ask any producer. I mean, they're happy to get higher prices. But I get it. Inflation is no fun. Nobody likes to pay higher prices. But one of the offsets is that Social Security recipients get that factored in as a higher payment every month. So that's going to be an expansion in the fiscal flows coming in January. So we have that. The other thing that I've been saying all along is, we're going to see some easing back of prices. We see bond yields coming back down, exactly as I said was going to happen. The Fed is not raising interest rates. There is a huge difference, and I've been trying to explain this, between taper and policy that says, hey, we're going to be increasing interest rates. They're not increasing interest rates anytime soon. That would be something that would be somewhat of a game changer. This minor, tapering of asset purchases, I've explained how actually that is somewhat of a fiscal expansion. They're not buying those securities. the interest that is paid on those securities stays in the economy as opposed to getting sucked out into the Fed and then the Fed having to give it back to the Treasury. So that's a positive. And again, I talked about this yesterday with respect to gold. Like, why did gold go up when everybody was, oh my God, taper, taper, you got to sell gold? No, gold went up because it was a response to, was like a growth factor that came into play. Okay, that was a minor fiscal expansion. That's what you should see when something like that happens. So that was good. I want to talk a little bit about PayPal. PayPal has been hit really, really hard. That's one of my big positions, actually. It's a good company. It is a growth company. Came out with earnings recently. I guess that disappointed the street. They had to revise a little bit their forward estimates, but PayPal is doing a deal with Amazon. This has been something they have been trying to, make happen for a long time. Amazon was brushing them off, and now it's happening. I mean, this is a great company. This is a growth company. More and more outlets and vendors are accepting PayPal. This pullback, I'm telling you, you're going to look back at this at some point down the road and say, wow, that was just an incredible buying opportunity. It's come down a lot in the past few weeks, but I got to stay bullish on this longer term. I mean, it just has a really good future. I think it has a really good future. Its growth prospects are excellent. They are excellent. Let me mention, yesterday I talked about oil producers shifting back to net long after 1 week being net short. And I sent out in my report yesterday, we're probably going to get a rise in oil prices. I don't know how big it's going to be, but we did see a pretty good move higher today. They're net long, but only by a small amount. So it's not like an aggressively long position. But it was, to me, I found it to be a little bit curious because they were 10 weeks long and they were selling into the rally the whole entire time, reducing their long position. And I knew they were going to flip short, and they did. And we saw a pullback. And then as soon as we got that pullback, they went right back to a net long position. So they obviously are seeing some tightness in the physical market again. I don't think that's going to... by the way, we're having like really, really warm weather here in New York City. I mean, it's like 70 degrees today. It's November 9th, man. It is hot. Though natural gas price is down 6% today, more than 6% today, almost 7% today, which, that's another mitigating factor for this whole inflation scenario. Yen is stronger today. Dollar was down a little bit. Keep your eyes, again, on the bond market. I think that the rise in yields that was so built in and so anticipated because of the taper, they got to taper, Fed is going to taper. I mean, that was an easy call. And I think we're going to see yields continue to come back down, especially at these fiscal levels. Don't forget, let me just explain something from an MMT standpoint. Net government spending adds to reserves, cash, money in the financial system, in the banking system. And that just naturally pressures interest rates lower. I mean, it's just a supply and demand thing. So, as long as that's going to be the condition for pretty much as far out as we can see, I don't anticipate higher interest rates. And I think the Fed is going to stay on the sidelines with respect to any kind of rate increase. I don't think it's going to happen, to be quite honest with you. So that's also a positive factor for financial assets, obviously stocks. Anyway, that's it for today, folks. I see some of you have been taking advantage of this last month when you could still sign up for my report before the price goes up on December 1st. So do that now. Go to pitbulleconomics.com. Sign up for your 30-day free trial. And I'll see everybody tomorrow. Bye.